The S&P 500 and Nasdaq close at record highs as a softer-than-expected jobs report spurs hopes of rate cuts. Stocks in the Asia-Pacific trade mixed, while the GIFT Nifty is indicating a slightly higher start for the Indian market. Crude prices gained for the fourth straight week, with Brent trading at around $86 a barrel. Gold prices rise to monthly highs in hopes of the Fed cutting rates soon. The Union Budget for 2024 and the first for NDA 3.0 will be presented in the Lok Sabha on the 23rd of this month, with a budget session getting underway on the 22nd. Titan's first quarter jewelry sales get hit by weak sentiment and high gold prices. Dabur and Marico see an uptick in volume growth, while IndusInd Bank's deposits and advances grow about 15% on a year-on-year basis. The Labour Party is back in power in the United Kingdom after a landslide victory in the elections. In France, the left-wing coalition brings a surprise to thwart the far-right, with the new Popular Front set to win more seats, although likely to fall short of an absolute majority. Good morning in the Mumbai News Centre. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines. A lot about markets, a lot about political landscape as well. We'll discuss all of that for you. But first up, let's take a look at the Asian markets. Now, it's quite a mixed picture for the Asian markets. Remember, in terms of the Japanese market, they are lower because wages in Japan fell 1.4% on a YY basis in May. It's the 26th straight decline that we are seeing in that particular market. So Nikkei is lower right now as we speak. The Taiwanese index up 1%, but the Hang Seng is seeing some cuts, 0.5% lower. The Chinese market continues to see a slide. The Chinese CSI 300 it has seen the fifth day of losses and is lowest level since February as well. So it's a mixed picture for Asian markets despite the handover that we got from the Wall Street as well. The GIFT Nifty, that'll come up for you on the screen because that is the one which will indicate the moves for our own markets. It's absolutely flat right now. That is the rate that we are getting right now. Of course, it'll keep updating and we'll keep getting you more updates in that one. But that is GIFT Nifty, a slightly lower start for the Indian markets. But in the US markets, Wall Street ended higher on Friday as the latest jobs report reignited hopes for rate cuts from the Federal Reserve. The S&P 500 added over 0.5% and the tech-heavy Nasdaq gained 0.1%. Both the indices reached all-time highs during the session and ended at records. Dow Jones also gained 67 points, and for the week, the S&P climbed nearly 2%, Nasdaq advanced 3.5%, and the Dow Jones added 0.7%. Treasury yields dropped following an unexpected rise in the unemployment rate. The US economy added slightly more jobs than expected in June. The non-farm payrolls increased by 206,000 for the month, better than the 2 lakh Dow Jones forecast. CNBC's Rick Santelli is here with the details of the jobs report.
Non-farm payrolls expands 206,000. And that, of course, is benchmarked against the rearview mirror, which right now is going to be revised. Minus 111,000 is the 2-month revision. And if we look at the unemployment rate, he nailed it. Our buddy nailed it up 0.1% from 4% to 4.1%. 4.1% is the hottest, and we have to go back a ways. Last time we were at 4.1 was November of 21. So you have to go back now to October of 21 to find a higher rate, which was 4.5. Now, let's look at the hourly earnings from a month-over-month perspective. Up 0.3%. That's 1/10 lighter than the rearview mirror. It's exactly as expectations. And just to put a face on it, last month was up 0.4, as I said. The month before that, of course, April, was only up 0.2. So you can see we're kind of running right in between. And if we look at the year-over-year perspective on hourly earnings, 3.9%. That dips below the 4.1% in the rearview mirror. And let's look at the way back machine. 3.9 equals April of 21. To find a lower number than that, you have to go back to May of 21 when it was 2.3%. Now, let's consider average hourly work week, 34.3. That's exactly as expected, exactly as last time. And if we continue to kind of look over the last 12 months, it's the highest frequency, 34.3. The labor force participation rate, always important, 62.6%. economists and analysts had it right. That's what they were expecting. It is 1/10 better than our last look at 62.5. 62.6 is the best level going back to just April when it was 62.7. If you recall, last month, of course, was the dip to 62.5, and that was the lowest level going all the way back to January of 23. And finally, U6. Okay, U3 is the unemployment rate that moved up to 4.1. U6 is the underemployment rate, and that remains at 7.4%.
All right, let's also listen into some important opinion coming in from the market experts on June jobs report and if this report will prompt the Federal Reserve to start cutting interest rates.
I think the number is on balance, a good number, not a great number. 206,000 is not a sign of an economy that's falling out of bed. They did some adjustments looking backward, obviously. And finally, I also say that the labor force participation rate is also a sign of an economy that's sort of coming back into balance. So if I were looking at this number as a policymaker, I'd say, this is pretty good news. The economy is not falling out of bed. We don't need to rush to cut to deal with that side of the mandate. Let's measure closely on inflation. And I would argue, frankly, September, while the market thinks it's the time to go, I think it's more 50-50. It's also possible to wait for a bit more data to be certain about the inflation continuing to slow. So we've seen signs of slowing, but from a high level. So from my standpoint, good number, not great number, not sure that it's the all clear that we must cut, that the Fed must cut in September.
Overall, we think that things are setting up for 2 cuts this year, one in September, one in December. What we're seeing is the economy is cooling, but it's cooling slowly. That's very much the theme in this jobs report. I sort of echo what I was saying about it. I think it's significant they downgraded payroll job growth by 111,000 for the prior 2 months, and also that drop in temporary workers. These are signs that the economy is just gradually decelerating here. And we're also seeing signs that, despite a tight labor market, it's still tight with an unemployment rate of 4.1%, we're not seeing wage growth come out of that. So next big headline will be next week's CPI report. We think we're going to be down to a 3.2% year-over-year number. And that should push the personal consumption figure down from 2.6 to 2.5 year-over-year. So we're edging ever closer to that Fed's 2% target. And I think that's enough progress for the Fed to begin to cut in September.
The headline number for June was higher than we expected at 206,000, but if you look at the private sector number, which was meaningfully lower, and a lot of job growth accounted for by healthcare, once again, with some weakness in the cyclical sectors, I think it's a soft landing kind of report. It, I think, will reassure Fed officials that the labor market has continued to rebalance. Wage growth also has come down. We're at 3.9% now for average hourly earnings. And the more important report is probably next week when we get the CPI for June in terms of what the Fed's going to do. But I think this does support the idea that they will cut relatively soon. And we continue to think September is the most likely.
Okay, with that, we'll step into a break. Up next, we'll tell you how these global cues could impact the Indian market. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast on CNBC-TV18. Well, in the last segment, we spoke about the global market action, but how will these overnight cues impact our own markets? We have a research team joining in to tell you what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Very good morning to both of you guys, and happy Monday to you. So, Darshan, will it be a happy Monday for the bulls? What is the market setup looking like today?
Morning, Sonal. So we are starting the week which will see beginning of the earnings season, expectations from the upcoming budget which is scheduled for July 23, and budget session will be starting on July 22 and will be ending on August 12. Now if you talk about the market on Friday and the last week, it was a mixed close for both sensex and Nifty, ending flat on Friday, and that's after a big move in two of its biggest contributors. Reliance Industries was the biggest contributor on the upside, while HDFC Bank dragged Nifty the most. And at the end, Nifty recovered more than 150 points from day's low to close with minor gains. For the week, it was a fifth session of consecutive gains for market, and that's the longest streak in 2024. Nifty recorded gains of more than 1%, while Nifty Bank was up 0.6%. For Nifty, major contribution came from Reliance Industries and the IT pack, while for Nifty Bank, ICICI Bank was the top contributor on the upside. Just if you talk about the HDFC Bank, in the first three sessions of last week, it was up 5%, and in the last two sessions, it fell almost 7%. On institutional front, we saw buying numbers from FIs in 3 out of 5 sessions last week. Talking about the global cues, US market closed Friday's session at day's high. IT stocks surged and Treasury yield fell after the labor market data. Unemployment rate, though, has risen to 4.1% in June from 4% that it reported in May. On domestic front today, we'll see stocks reacting to their business updates, and those are IndusInd Bank, Titan, Marico, Dabur, Nykaa and Adani Wilmar. And watch out for shipbuilders. Last week, we saw gains up to 33% from names like Garden Ship, Cochin Shipyard and Mazgaon Dock. This week, we'll have earnings season kicking in. TCS is reporting on July 11 and HCL Tech on July 12. Lastly, GIFT Nifty is indicating a subdued start for today.
Yeah, all right. Thank you so much, Sudarshan, for all those cues. Well, let me go across to Mangalam for all the cues from the F&O space now. Hey, Mangalam, morning.
Good morning. So consolidation with a positive bias, that's what we've been looking at in the markets, right? So the Friday's range actually tells you exactly that. On the day where, we saw a big decline come in, one of its large heavyweights, the Nifty's day low was close to around 24,169 and the day's high was 24,363. Again, coinciding with the broader range that we've been talking about, 24,150 to 24,400 on the way up itself. It was a bit of a tug of war between index heavyweights. So if you look at, the intraday charts side by side, for both HDFC Bank as well as Reliance, you would see that last hour there was a big uptick that we saw in Reliance, whereas HDFC Bank closed at the lower end of trading session with a cut of almost 4.5%, near 5%. But despite that, the FIs actually bought in the cash market. So there was a purchase of close to around 1,250 crores in the cash market. The DII sold 1,650 crores. There was some profit booking by the FIs in index futures as well. So near 500 crore worth selling is what we saw. 10,000 long contracts being unwound, 2,500 short contracts being unwound as well. And as a result of which, the long exposure, which stood at closer to 4 lakh contracts, has now come down marginally to 3.84 lakh contracts, with long exposure still at 84% itself. Active Nifty options as well. Told you about the range that we're talking about. 24,200 put has a premium of what? 60 rupees. So 24,150 is an important support. On the way up, 24,400 call is equally active as well, with a premium of almost 93 rupees, telling you 24,400 to 24,500 would be the resistance zone. The one stock to watch out for will be HDFC Bank. After a big decline that we saw on Friday, the stock is very close to the 1650 mark, which also is the 20-day moving average, and the 1650 put on HDFC Bank is the most active. So do we see a bounce back from here or not is the big question. Also, keep an eye out on GNFC. We told you that GNFC is likely to enter F&O ban, and that's exactly what's happened.
Okay, all right. Thank you so much for all those F&O cues, Mangalam. Let me go back to Sudarshan. He'll list out all the stocks which will be in focus today. Sudarshan?
So we'll start with all the FMCG companies that have reported quarterly business updates. Starting with Titan, jewelry domestic operations have grown 8% year-on-year. High gold prices, lower wedding days and weak sentiment have impacted demand. Marico domestic business posted modest uptick in underlying volume growth. Consolidated revenue grew in high single digit, and operating profit is expected to grow slightly ahead of revenue. Dabur saw QoQ improvement in demand trades, with rural growth picking up. Consolidated revenue growth seen in mid to high single digit, and operating profit is expected to grow marginally ahead of revenue. Nykaa, cons revenue growth to be around 20 to 23% year-on-year. Fashion industry in India continues to face challenges. That's what company says. And fashion revenue growth in Q1 is seen around 20%. Adani Wilmar Q1 volume growth was at 13%. It saw strong growth in food volume and says company that growth will persist. IndusInd Bank, deposits rise more than 3%, advances were up 1.5% sequentially. Bank of Baroda, both deposits and advances fell nearly 2% sequentially. AU Small Finance Bank deposits were down 0.5%, while AUM was up 3% sequentially. Union Bank deposits and advance see minor jump sequentially. Info Edge overall billings growth is steady and similar to Q4. Standalone billings were up 11% at rupees 579 crore. Tata Motors has given JLR update. Q1 wholesales were up 5%. Retail sales were up 9% year-on-year. Tata Steel India Q1 production was up 3%. Netherlands production was up 11% year-on-year. But BBC reports new Labour government is working on a better deal for the Port Talbot Steel Works. These are the stocks that might be in focus today.
Okay, all right. Thank you so much, Sudarshan, for joining us with the list of stocks on our radar. With that, let's move on because it's that time of the year. Heavy rainfall since the early morning hours in Mumbai has resulted in severe waterlogging and the disruption of public transport services as well, bringing the early morning commute to a halt. Santhya is joining us on the phone line to tell us more. Santhya?
Good morning, Sonal. So this is, as you rightly mentioned, that time of the year, and this is exactly the time when every Mumbaiker questions the tax they pay and the facilities they are provided with, because whether it's BMC, whether the BMC is ruled by any party, the situation every year is the same. It's waterlogging, halted trains, diverted routes, and submerged areas. Now let's talk about what has happened since yesterday. So since yesterday, last night, it started raining heavily in Mumbai and the entire Mumbai metropolitan region. Today morning at around 5:15, the central local rail services came to a halt because of waterlogging on the tracks at Bhandup station. It was only at 6:40 in the morning that the services for the fast trains, for the slow trains were restored, but not the fast trains. So that bit, the train part, remains problematic and inconvenient for the commuters. The Western Railway staff claims that the trains on Western Railway are running smoothly. Now let's talk about what's happening in terms of public transport, road public transport. So best buses on 10 routes have been diverted. There are 10 routes diversion for the best buses. Other than that, what's the traffic situation? There's a massive traffic jam on the Western Express Freeway, anyway a notorious patch. And the waterlogging situation has made it even worse. There's traffic jam in parts of eastern Mumbai as well. Now, Sonal, let's talk about the waterlogging situation. The usual low-lying areas, whether it's Govandi, whether it's Bhandup, Gandhi Circle, Sion, Kurla, Andheri subway, Malad subway, all these areas, despite all the preparations by the BMC, remain problematic. So what happens, BMC every year puts water pumps in these notorious patches so that the water logging situation can be brought under control ASAP, so that as the day will proceed, the water pump situation will become more and more clear. But for now, another important decision, so keeping the rain situation in mind, BMC has declared holiday for the first session schools. In Mumbai, schools are running two batches. One is 9 a.m. and another one is 11 a.m. So holiday for all the schools, BMC, public, private, all the schools. There's a holiday for the first session, 9 a.m. session. What about the 11 a.m. session? That decision is yet to be taken by the BMC. So as and when that announcement will happen, we at CNBC-TV18 will inform our viewers. But for now, the session for 9 a.m., that session, all the schools has been declared a holiday. For another important thing here, Sonal, unfortunately, this time also there was no prior warning from the IMD as far as the 24 hours forecast is concerned. It did not highlight any possibility of this kind of a rainfall.
That's right, Santhya. It's a story that we talk about every year. It's the same thing that happens. But thank you so much for bringing us all those details. We'll keep coming back to you for more updates on this one. With that, we'll slip into a break. When we come back, we'll talk to you about all the updates from the financials and the FMCG companies for Q1 FY25 and a lot more. Stay tuned. Welcome back. You're watching Power Breakfast on CNBC-TV18. Let's focus on some business updates now, and especially from the FMCG space. There are a handful of them. Mangalam is joining us now. Mangalam.
Good morning. So let's look at Titan first. If you look at Titan, you know, the jewelry business, domestic operations grew just about 8%. Even though Akshaya Tritiya witnessed a double-digit growth, high gold prices, lower wedding days and weak sentiment impacted demand. So as a result of which, the street is expecting some decline in the Titan stock price, largely because its competitor, Kalyan, reported a 29% growth. Additionally, the company said that studded growth was moderately lower in comparison, so that impacts their margins as well, which the company anyway did not see going beyond 12%. None of the other sectors as well inspired a lot of confidence. We did see some 5 to 7% sort of EPS cuts come by from brokerages. The other one that I'm looking at are Marico and Dabur. For both of them, the important part is there has been sequential improvement in demand and volume uptick as well. So the quarter for Dabur saw QOQ improvement in demand trends, especially with rural growth picking up. Consolidated revenue for them seen in about mid to high single digit, with India recording mid-single digit volume growth. 90% of their business, which is home and personal care along with healthcare, grew in high single digits. So that's a positive. And if you look at Marico as well, the domestic business posted modest uptick in demand, and Parachute coconut oil posted low single digit volume growth. But despite that, we saw improvement in Saffola oils, and the company said this improving trajectory is likely to continue with higher domestic volume growth and higher realizations as well. Amidst all of this, for both Dabur and Marico, the operating profits grew ahead of revenue, indicating some sort of margin improvement. So see positivity on both Dabur and Marico, well as a big red on Titan.
Okay, all right. That is all about the FMCG updates. Thank you so much for getting us up to speed with that, Mangala. Let's now get to the latest updates on the France election. The country is set to face a hung parliament with no party gaining an outright majority in the second round of parliamentary election. Early projections show that France's left-wing New Popular Front coalition won the most seats in the second voting round of parliamentary elections. CNBC's Charlotte Reed is here with the latest updates.
Just 4 weeks ago, President Macron called for a snap parliamentary election after the far right made some huge gains in the European election. He said it was time for a moment of clarification for the country, and that moment has come. But it was a shock result because the far right didn't do as well as expected. If anything, they came third in the result of the second round of the parliamentary election, and none of the polls had predicted that. What came first is a left-wing bloc that's composed of the Socialists, the Greens, and the far left, La France Insoumise. And they said that they want to be in charge of the next government, but they don't have an absolute majority. And that is the key here, that none of the blocs really have an absolute majority. President Macron's camp that came second is also very far from the old magic number of 289 seats. And the far right that came third are also very far from that number. So now it opens a period of uncertainty and uncharted territory, because some people are talking about potentially the need of a coalition to reach that 289 number majority. And this is not in the French tradition at all, unlike other countries like Germany. So the parties will start talking and try to reach an agreement, but some parties like La France Insoumise, the far left party, have said they do not want to negotiate with President Macron's party and other centrist parties. So we have to wait and see. We don't know who could become the next prime minister. The current prime minister, Gabriel Attal, said he will put his resignation to the president tomorrow morning, but he's ready to stay for the foreseeable future while a new government is put in place, and also because of some challenges for the country, like the Olympics starting in just a few days. So all this is really uncharted territory for France. There could be a period of instability, but hung parliament, for many market observers, said it's the least bad result of what we could have expected tonight, because a far right or a far left absolute majority would have been more dangerous for the market and for France's economy. So a hung parliament could be good news, but it certainly still opens a lot of questions.
All right, that's the update from France elections. Of course, we'll keep getting you more updates in this one. With that, it's curtains down on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next.